Is anybody else getting tired of me talking about interest rate policy and what it means to you? And so we've been talking about this for the last roughly 2.5 years. Inflation has finally come down between that 2 to 3% target that the US and Canadian central banks are aiming for. And we've just seen the first US rate cut in over 4 years. And what the US Fed is hoping to do is they're trying to, quote unquote, have the US economy have a soft landing, which means, we don't go into a extended recession, inflation or job losses increase. So they're really watching this data quite carefully, and they're quite comfortable. Everything has been coming down almost in tandem. And so this is one of the reasons why they're much more comfortable to be cutting, which the last one was 50 basis points or half a point. Now, moving forward, we believe they will continue to cut. Whether we see one by the end of the year or not remains to be seen. And there's a very specific reason for this. Even though inflation is actually coming down, there's some other data that's actually recently come out that actually may have them pause from another rate cut. So before I get to that, let's actually just talk a little bit about what does a rate cut mean to you. Generally speaking, after the first rate cut occurs, and if we go back over the last, 4 to 50 years or so and look at the first column, over 13 different periods, only 46% of the time, 3 months after the first rate cut, has the market posted a positive return. Well, when we get €1 from a rate cut, we actually go up to almost 70% of the S&P 500 hitting positive returns. So from that point of view, we are actually likely going to be in for a good little run here over the next 9 to 12 months, perhaps. Not always does it spell success. We have had some negative periods in there, but generally speaking, when you get 12 months out, we tend to have positive returns. Now, I said there's that one exception about whether they'll continue to cut, and really that's just the job market. And this graph here shows, since roughly March, the US actual jobs have actually decreased over the last few months. But surprisingly, September was very strong. It actually came in over 250,000 new jobs. They were expecting some 200,000. And what's happened now is the US Fed may just think the economy is actually rolling along a little bit too strong, and it may cause them to maybe skip a rate cut, maybe until later into the year, into the new year. So time will tell, but I think we're in the right direction. I think we're going to continue to see rate cuts. I think they're motivated to keep the economy rolling as best they can, so long as they don't see it slip into a recession or unemployment rate go up too high or what have you. So we'll see what happens. If you're curious about how it might affect you, feel free to drop me a line, send me an email. Be happy to have a quick chat. Have a great day.